Hello my dear viewers and my dear students. We are doing the problem on final accounts of sole trading concern. Already one problem we have done in the previous problem regarding the preparation of trading profit and loss account and balance sheet. So now I am going to start the next problems, problem number 3 on preparation of trading profit and loss account and balance sheet of a sole trader. Right. So if first time if you are watching my channel, I suggest you to watch the theory of this final accounts, how to prepare the trading profit and loss account and balance sheet and what are the adjustment. I have given the video regarding the complete explanation, theory explanation. So go through that theory video, then you come to the problem. Definitely you can be able to get a good grasp on this topic of final accounts. So before starting the problem, I expect my viewers to have a hard copy of the problems which I have provided in the link under my description. So keep ready the problems and watch the video. Now for the first time those who are viewing my channel, I suggest you to go to the playlist of my channel. I have provided the videos for number of subjects like advanced accounting, financial accounting, cost accounting, corporate accounting, financial management, etc. Select your subject, choose your topic and watch the video. Now I am going to start the next problem, problem number 3. From the following trial balance of Sri Rangoli, prepare final accounts after making necessary adjustments. The trial balance is given in the problem. Debit side, I am reading out the debit side and finding out which item will go where. The trial balance items will appear only once, either in trading account or in profit and loss account or in balance sheet. Any one place it will come. The adjustments will appear twice. Once if it comes in trading account, again it may come in balance sheet. If once it is taken in P&L account, again it will be taken in the balance sheet. So twice effect will be there on adjustment. So first of all, I am reading out the trial balance. Trial balance debit side. Freehold land. This will be taken on the asset side of the balance sheet only once. Loose tools. Again, loose tool is an asset. It will be taken on the asset side. Plant and machinery. Asset. Debtors. Asset. Cash at bank. Asset. Stock on 1/4/2011. 1/4/2011 means beginning of the year. We are closing the accounts on 31st March 2012. So our year begins from 1st April 2011. Though the stock on 1/4/2011 is the opening stock. Opening stock will be taken debit side of trading account only once. That's all. Insurance, P&L account debit side. Then bad debts, P&L account, profit and loss account debit side. Bills receivable asset. Then purchases, trading account to debit side. Cash in hand asset. Rent rates and taxes, rents rates and interest debit side of P&L account, profit and loss account. Wages, direct expenses, so trading account debit side. Trade expenses, P&L account debit side. Salaries, profit and loss account debit side. Carriage inward, trading account debit side. Then discount. Now discount is given in the debit side, so it is nothing but discount allowed. Discount may be given on debit side, may be given on the credit side. If it is given on the debit side, it is discount allowed. It will be taken on debit side of profit and loss account. If it is given on the credit side, it is discount received. It will be taken on the credit side of P&L. So debit side, I have explained you. Now credit side items. Mortgage loan. This is a liability. Balance sheet liability side, mortgage loan. Bills payable. Again it's a liability. Then sales, trading account, credit side. Only once it will come. Creditors, liability side of the balance sheet. Discount. Now here discount is given on debit side as well as credit side. Now this credit side discount 5,350 is discount received. It will be taken on the credit side of profit and loss account. Capital, liability side of the balance sheet. So I have read out all the items given in the trial balance. I have explained you which item will be taken where. Right? Now adjustment. Normally students will commit the mistake in adjustment. Listen carefully. What is the treatment? First adjustment, insurance unexpired to the extent of 280. Insurance unexpired means it's a prepaid insurance. It is the insurance paid in advance. So how much is the insurance paid? That will be given the trial balance debit side. Trial balance debit side, insurance paid is given 600. So totally 600 rupees insurance paid. Out of 600, 280 rupees is paid in advance for the next year. So this 280 does not belong to the current year. So we deduct. So insurance paid 600 minus prepaid insurance 280. So 600 minus 280 net amount will be taken in P&L account. Again, this prepaid insurance should be taken on the asset side of the balance sheet. On the asset side of the balance sheet, double effect. Once we are deducting from insurance in P&L account, and again prepaid insurance will be shown on the asset side of the balance sheet. First adjustment over. Second, salaries and rent are outstanding to the extent of 280 and 120 respectively. Salary and rent are outstanding. Outstanding means due but not paid. It is the expenditure of the current year but it is not paid. So what we have to do, outstanding salary will be added to salary in P&L account. In profit and loss account, we add the outstanding salaries to the salaries paid. In the trial balance, it is given salaries paid. Salaries paid are 3,120. 3,120 are salary paid given in the trial balance. To this we add outstanding salary. The total will be taken in the outer column. This outstanding salary of rupees 280 again should be shown on the liabilities side of the balance sheet. So twice effect. Outstanding salary are added to salary in P&L account. Outstanding salary will be shown as a liability. Same treatment for rent. Rent paid is given in the trial balance as 3,100. Rent paid is given in the trial balance 3,100. To 3,100 we add outstanding rent in P&L account. You can see here. Rent rates 3,100 paid. Add outstanding rent 120. Take the total in the outer column. This outstanding rent of 120 again should be shown on the liabilities side of the balance sheet. So twice effect होगा. Once we have added the rent, and secondly again outstanding rent will be shown as a liability. Two adjustment over. Third adjustment. Loose tools are valued 9,000. Loose tools are the consumable items. When we use the loose tools, the value of the loose tools will decrease. So in the trial balance, loose tools are given 11,200. In the trial balance, loose tools value are given 11,200. In adjustment, it is saying that end of the year, the value of loose tools remained 9,000. Beginning of the year 11,200. End of the year 9,000. The value has decreased. Or in other words, we can say depreciated. Loose tools are depreciated. 11,200 minus 9,000. 2,200 is the loss on revaluation of loose tools. It is a loss on revaluation of loose tools. Right? This is a loss. So it will be debited to profit and loss account. Profit and loss account is a nominal account. All expenses, losses will be debited. So loss, here you have tried loss on revaluation of loose tools. 11,200 minus 9,000, 2,200. Three adjustment completed. Next adjustment, allow interest on capital at the rate of 5% per annum. Allow interest on capital at 5% per annum. So what is the capital? In the trial balance, capital is given as 75,000. In the trial balance, capital is given 75,000. So 5% of 75,000, 3,750. So 3,750 is the interest on capital. It will come twice. Interest on capital will be debited to profit and loss account. Here I have taken interest on capital's 5% of 75,000, 3,750 debited to profit and loss account. Again, interest on capital will be added to capital in the balance sheet. Added to capital in the balance sheet. Double effect. Every adjustment will have dual effect. If you forget to take one effect, then definitely your balance sheet will not tally. Next, closing stock was valued 60,000 on 31st March 2012. Closing stock is 60,000. It will appear twice. Once closing stock will be taken on trading account credit side. Again closing stock will be taken on the asset side of the balance sheet. That's all. This is the complete explanation of the problem. Now, presentation of the solution. See here. Trading profit and loss account of Sri Rangoli for the year ended 31st March 2012. Right? Presentation is very, very important. If you write an examination roughly, randomly, then definitely you may not get the full marks. And that also, it will not appear good. So always presentation should be attractive. Now, debit side, credit side, particulars amount. Credit side I have taken sales. There are no sales written. In this problem, there are no sales written. If there are sales written, we would have deducted. Now, sales I have taken directly out of column. Closing stock 60,000. Take the total 3,03,000. Debit side, first item as usual, opening stock. 1st April 2011, opening stock 21,000 given. Purchases are given 1 lakh. Wages and carriage. These are the two direct expenses given in the problem. Wages and carriage. There are two types of carriage. Carriage inward, carriage outward. Carriage inward will be taken in trading account. Carriage outward will be taken in profit and loss account. If nothing is given, only carriage is given, we assume it is inward. It is inward. Now, 3,03,000 minus 21,000 minus 1 lakh minus 21,400 minus 700. Balancing figure is 1,59,500. This is the gross profit carried down. Balancing figure. So we got the answer of trading account. The trading account answer is we got a gross profit of 1,59,500. Now it is brought down. From here onwards we are starting profit and loss account. By gross profit brought down 1,59,900. Only one income is there, that is discount receipt. Indirect income is only one, that is discount receipt. Now debit side, salaries. Just now I told you add outstanding salary. Adjustment में दे दिया है outstanding salary add. Insurance 600. Adjustment it is given 280 rupees prepaid insurance or unexpired insurance. Unexpired or prepaid means same. So prepaid expenses will be deducted. 320. Bad debts directly I have taken no adjustment. Rent and rates 3,100. Add outstanding rent we have added. Traveling expenses directly I have taken. Discount allowed directly I have taken. Loss on revaluation of loose tools. Just now I have explained. In the trial balance, loose tools are 11,200. In adjustment, it is saying end of the year the value of loose tools is 9,000 only. So 11,200 beginning of the year. End of the year 9,000. So remaining is the loss or depreciation on loose tools. Loss on revaluation of loose tools 2,200. Interest on capital 5% on capital 3,750. That's all. Take the total of the credit side 1,65,200 250. From 165 to 250 deduct minus all these debit items. So ultimately you will get the balancing figure 1,43,610. This 1,43,610 is the net profit balancing figure, and this net profit will be added to capital in the balance sheet. That's all. So we have completed trading profit and loss account. Now I am explaining the balance sheet. See, balance sheet we are following liquidity method of marshalling the items. Liquidity method means current assets and current liability should be taken first. The liability side I have started with outstanding expenses. The two outstanding expenses are there: salary outstanding, rent outstanding. Adjustment में दे दिया है. So rent outstanding, salary outstanding. Then bills payable, no adjustment, nothing, directly on liability side. Sundry creditors, mortgage loan. Then capital. Beginning of the year capital 75,000 are there. To this we have added the net profit. The net profit is 1,43,610. We got it in P&L account. In profit and loss account we got a net profit of 1,43,610. Add up, we'll get 2,18,610. To this 2,18,610 add the interest on capital. Adjustment it is given, provide interest on capital at 5%. Once we have debited to P&L account, again we have to add to capital. So ultimately, finally, capital at the end of the year 2,22,360. That's it. Now come to asset side. The most liquid asset, cash in hand, cash at bank. I have started with cash in hand, cash at bank. Then bills receivable, no adjustment. Directly we have taken prepaid expenses. This is given in adjustment in the problem. We have taken twice. Once prepaid insurance is deducted from insurance, again prepaid insurance will be shown on the asset side. Closing stock is given in the adjustment. It will appear twice. Trading account credit side, again asset side. Then debtors, no adjustment, directly I have taken. Loose tools. Loose tools 11,200 is given in the trial balance minus written off. How much is written off? 2,200 is written off. So 11,200 minus 2,200. Here we have written 2,200 written off. So net amount available is 9,000. Then freehold land directly I have taken. Plant and machinery directly I have taken. No adjustment. The balance sheet is tallied 3,760,000. That's all. This is the end of problem number 3. Now we'll start problem number 4. See the fourth problem carefully. From the following figures, prepare the trading profit and loss account for the year ended 31st December 2013 and balance sheet as on that date. In this problem, we are given the trial balance items and few adjustments. So as usual, trial balance will appear only once. Adjustment items will appear twice. So first of all, I am reading out the items and declaring which item will go where. First, capital is given. Liability side. Drawings, it will be deducted from capital on liability side only once. Sundry creditors, liability side. Bills payable, liabilities. Sundry debtors, asset. Bills receivable, asset. Loan advanced to Deepak and company. Loan advanced to Deepak and company. That means this businessman, this sole trader has given a loan. Loan not taken, given. So if loan taken is there, it would have been taken on the liability side. When loan advanced is given, it is an asset. The loan advanced to Deepak and company will be taken on the asset side. Then fixtures and fittings. So fixtures and fitting is an asset. Opening stock, trading account, debit side. Cash in hand, asset. Cash at State Bank of India, asset. Overdraft with Central Bank of India. Overdraft is a temporary loan. It's a liability. The overdraft will be taken on the liability side. No adjustment, nothing. Directly we will take it. Then purchases, trading account, debit side. Duty and clearing charges. These are the direct expenses taken debit side of trading account. Then we have sales, trading account, credit side. Salaries, profit and loss account, debit side. Return from customers, it is sales return. Return from customers are sales return. It will be deducted from sales. Only once, that's it. From sales, we deduct sales return. Similarly, return to creditors, it's a purchase return. Return to creditor is a purchase return. It will be deducted from purchases. Then commission and traveling expenses, profit and loss account, debit side. General expenses, profit and loss account, debit side. Rent paid, profit and loss account, debit side. Commission received, this is other income, profit and loss account, credit side, commission received. So we have decided all the items given in the trial balance. Now we'll see the adjustment. The first adjustment, closing stock, as usual. Very easiest adjustment is closing stock. It will appear twice. Every problem we will have. Trading account, credit side, balance sheet, asset side. Finished. Interest to be received. Interest received is not given in the trial balance. Interest received is not given. Interest to be received means receivable. So interest receivable will appear twice. First of all, it's our other income. So profit and loss account, credit side, interest receivable. Again, interest receivable will be shown on the asset side. It's an asset. It is amount to be received. So next, outstanding salary. Already previous problem we have done this. Outstanding salary will be added to salary in P&L account. Again, outstanding salary will be shown on the liability side. Depreciate fixtures and fitting by 10%. The furniture and fixtures should be depreciated by 10%. Depreciation 10%. The value of fixtures and fittings are 8,500. On 8,500, 10%, 850. The depreciation on fixtures 850 will be taken on debit side of profit and loss account. Again, depreciation will be deducted from fixtures on the asset side. Commission received in advance. So in the trial balance already commission received is given. Adjustment, it is saying commission received in advance, means this is not current year's income. It will be carried forward to the next year. So commission received in advance will be deducted from commission received. Deducted from commission received on credit side of P&L account. And this commission received in advance will be shown as a liability. Will be shown as a liability. It is income received in advance. Allow interest on capital at 8%, just like the previous problem. Allow interest on capital at 8%. This will appear twice. P&L account debit side, interest on capital. Again, interest on capital will be added to capital on the liability side. 8% will be calculated on capital. Capital is 30,000. So 30,000 into 8%, 2,400. So 2,400 is interest on capital, debit side of P&L account. Again, it will be added to capital. I have explained all the points given in the problem. Now presentation of the solution will be like this. Trading profit and loss account of Dash for the year ended 31st December 2013. Credit side you see first, sales. Sales are given 1,28,000. From sales, we have to deduct sales return. So it is given return from customers. Return from customers are sales return, 1,000 given. Subtract 1,000, 1,27,000 is the net sales. Closing stock is given in adjustment 50,000. That's all. Only two items created. Debit side, opening stock 47,000 as usual we have taken. Purchases are given 50,000 and return to creditors. Return to creditors are purchase returns. Deduct purchase return 48,900 net purchases. Then duty and clearing charges, this is the only direct expense. Only one direct expense, duty and clearing charges. Now take the total credit side, 1,77,000. Both the sides you make 1,77,000. From 1,77,000 minus 47,000 minus 48,900 minus 3,500. The balancing figure we are getting 77,600. This is the gross profit. The two gross profit carried down. Trading account completed. Now I am moving on to profit and loss account. So by gross profit brought down 77,600. Now other incomes are commission received. In the trial balance it is given commission received 4,000. From this 4,000 we subtract commission received in advance given in the adjustment. So commission received in advance will be deducted 600. So commission for current year is 3,400 only. This 600 again will be shown on the liability side. It is income received in advance. Similarly, interest receivable. No interest received is given in the trial balance. In adjustment, it is given interest to be received, interest receivable. So adjustment items will appear twice. Once it will be taken on the credit side of P&L account, again it will be taken on the asset side of the balance sheet. Credit side completed. Now debit side, first item as usual will take salaries paid. In the trial balance, salaries paid are given 9,500. Adjustment, it is saying salary outstanding 500. So 9,500 plus 500, 10,000 rupees are the total salaries for the year. Again, this outstanding salary will be shown on the liabilities side of the balance sheet. Then rent paid, no adjustment, nothing directly. Depreciation on fixtures, 10% on value of fixtures. Value of fixtures are 8,500, 10% 850. General expenses 2,500, no adjustment. Commission and traveling expense paid 4,700. Interest on capital at the rate of 8%. 8% on capital, capital 30,000, 2,400. That's all. We have taken all the items. Credit side total you take 81,200. Take the total 81,200 minus all these values. Subtract all the debit values. You will get the balancing figure. 58,750 is the balancing figure. This is the net profit. And this net profit will be transferred to capital in the balance sheet. That's all. Trading profit and loss account completed. Now I am moving on to balance sheet. Balance sheet of Dash as on 31st December 2013. Liabilities, assets. First we'll come to liabilities. First we take the liquid liability, current liabilities. The current liabilities, sundry creditors, no adjustment, nothing. Jaisa problem mein diya same. Bills payable, same, no change. Overdraft with central bank. Overdraft with central bank is a loan taken from central bank. Liability. Outstanding salary, just now I told you. Then commission received in advance. It's an income received in advance, liability side. Then capital beginning of the year 30,000. Add net profit 58,750. So add up the net profit, we'll get 88,750. To this we add interest on capital 2,400. Then subtract the drawings. Drawings are given 6,000. Subtract 6,000. 85,150 is the capital at the end of the year. So remember what we have to add and what we have to subtract. Net profit we have to add, interest on capital we have to add, and drawings we have to subtract. Over. Liability side completed. Now asset side. Most liquid assets, cash in hand, cash at SBI. Then bills receivable, no adjustment. Sundry debtors, no adjustment. Loan advanced to Deepak, I already told you it is an asset, loan given. Interest receivable is an asset. Closing stock, already every problem we come across. Fixtures 8,500 is given the trial balance, and depreciation provided is 850 given in the adjustment. So depreciation will appear twice. P&L account debit side, deduct 7,650. So ultimately balance sheet is tallied 1,39,250. That's all. So we have completed problem number 4. The 4 main problems we have done on final accounts of sole trading concern. I have explained each and every item given in the problem where we have to take. So if you are satisfied with my lecture, give a like to the video and share it in your group, in your friend circle, so that more students can be able to gain the knowledge from these videos. Subscribe if you have not yet subscribed. We'll continue this in the next video, the next problem.